Excuse me. Good afternoon, everyone. Welcome to today's webinar, Auto Trading Spreads and Outrights. Today's presenters are CQG Product Specialist Manager Jim Stavros, and he is joined by CQG Product Specialist Kevin Falkman. Welcome, Jim and Kevin.
Hey, how are you, Tom?
Great. It's good to have you too. My name is Tom Hartle. I am CQG's Director of Product Training, and I will be your host and moderator today. Before we get started, I want to mention a few housekeeping items. If you have any questions during the webinar, please enter them into the Q&A section window at any time. We'll have Jim or Kevin answer the questions during the course of this presentation. If you're viewing the presentation in full screen mode, you can find Q&A in the WebEx toolbar at the top of your screen and the drop-down menu on the far right. If you're having any sound issues, please contact the host via WebEx chat. We'll be recording today's webinar, and it will be posted within 48 hours to the events section on news.cqg.com. All registered attendees will receive an email with a link to the recording. Now it's my pleasure to introduce Jim Stavros and Kevin Falkman. Jim is a veteran trader of 29 years. He is a member of the CME. He joined CQG in 2005. He specializes in black box system programming in CQG. His talents include developing custom studies, conditions, and trade systems for use in CQG AutoTrader. He is also an expert in Microsoft Excel-based RTD formulas. Kevin's experience ranges from a career of trading the Dow Jones futures contract on the CBOT floor to today providing high-level technical support for institutional trading desks, proprietary trading groups, and individual traders to leverage CQG Integrated Client, CQG Spreader, and global trade routing technologies. He is involved in the complete CQG Spreader lifecycle. Now it's my pleasure to turn the webinar over to you, Jim and Kevin.
Hey, I'm going to start with, you can all see my screen hopefully. What I want to start with is building a QFormula. So this is basically a page that I set up so that if I'm going to trade my spreads automatically, I kind of like to monitor it in this way. So I'm going to go ahead and go into Formula. Okay, so the first thing you need to do is build your QFormulas. Okay, so one of the formulas that we're using is nat gas, 2 nat gases minus crude oil. Now, I'm doing them in currency, and I think you'll find if you're going to auto trade, doing them in currency is going to be the easiest way to put profit targets and stop losses in, because otherwise you have to know what the point value is. You can do it in points, but if you convert it to currency, you'll actually, the system will make more sense to you. If you put $100, it'll be $100 because the chart will display $100 on the spread. Okay, I also put my ratios in here. I want Kevin to go through just briefly, this isn't a spreader demo, but I want him to go through briefly how you would set up your auto payups, because when you're using AutoTrader, it is important that you do not get hung. So the system is not going to understand if you're hung, so you need to have pay-up logic in there. If you can't have pay-up logic, or you don't want pay-up logic in there, you're going to have to sit right by your machine and make sure that you get filled on that particular trade, because AutoTrader will not understand a hang, and it will assume that you're filled, and it will continue to trade accordingly. So that's critical. I highly recommend some sort of pay-up. So I'm going to turn it over briefly to Kevin, and you'll be able to, he'll go through the setup. Okay.
Thanks, Jim.
Are you sharing your screen?
I'm going to share my CQG application here. We should see in just a moment. There we are. Very similar to Jim's screen, I'm just going to speak momentarily about the setup trading parameters for any specific strategy that you're trading. The strategy, as Jim showed, available as a QFormula, and we can get to the specifics of that strategy by going into the trade execution patterns. For the specific strategy that Jim is going to illustrate today, I've got it up here already, and we're just talking about the if incomplete section. Incomplete being CQG's word for hung or out of balance. So what we need to do first is just tell the system essentially to replace the hung order to complete the strategy. We could choose, if we're working both legs, to set up a pay-up strategy for both legs. It could be just something as simple as pay-ups, and that's a modification of the hung order from its price where it needed to complete to a new price based on the price increments we've listed here. So doing a pure pay-up straight away would take an order in a hung state at its limit price where it was hung, and then modify it using a pay-up.
Make sure you use enough pay-up ticks, because if you don't use enough ticks, you could still get hung. So again,
of course,
can't get hung on the spreader. That is just key.
So modifying the order, you want to make sure that you're using a amount of pay-ups that makes sense for the specific market that you're trading. If you're trading a market that's 1 or 2 ticks wide, then accordingly you'll have to set the pay-ups for that specific market. In addition to just pure pay-ups, CQG Spreader has the ability to set a timer. We could work that limit order for up to 30 seconds where it was hung, and if you're still unable after that timer is exhausted, then the system would then modify the order based on the amount of pay-ups that you've selected here. In addition to that, we can look at the market in terms of trailing. We can also decide that we're going to trail the market and in the hung state and move the order rather according to how the market moves based on either the same side or the opposite side. So in terms of setting pay-ups following the market or trailing the market on the same side, if you're a seller, you're hung on the offer, and the market goes offer at the next price lower, you would modify your order based on the activity on the offer which you're trying to complete in the sell. Or the system can look at the opposite side of the market. In the case where you're hung on the offer, the system will monitor the bid. In the case where the bid either dries up, trades out, or disappears completely, the order would then modify based on the activity on the opposite side of the market, in this case the bid. So we have the ability to trail the market based on the activity of the same side or the opposite side. Or as I mentioned first, just do pure pay-ups, or have the ability to do pay-ups with a timer on it. For some of the folks that are trading, let's say, short-term interest rates, these settings may be of value to you. We can actually monitor the market, and this is looking at just the best bidder offer for a threshold to be broken. So we can say we're willing to pay up 1 price increment if the offer drops below 500. And that's configured here just based on pure DOM volume. And I set the threshold to 500, and we monitor the bid or the offer, and then decide whether to pay up once that threshold is broken. The other settings here, which may be of value, again, to a short-term interest rate trader, would be looking at the volume of the market on best bidder offer relative to your order size. And this is a ratio. So for example, if there's 1,000 on the offer or bid, and you're leaning against that, if for some reason that volume changed according to your relationship that you've configured in this field here, then the system would pay up based on that threshold being broken. And the final choice in terms of pay-ups would be a relationship of the best bidder offer quantities. So if the offer is sizable and the bid is small and you're leaning against the offer, if that relationship changed where the bid decided to grow and the offer diminished or started to trade, you would have to make a decision on that relationship of the volume of the bid and the offer changing. So that can be configured here in the ratio that I've set, and the radio buttons next to ratio between the best bidder offer. So again, just to reiterate what Jim was mentioning in terms of utilizing a auto trading capability within CQG Spreader, it is imperative to, before you begin trading, to build into your system essentially some slippage. And that slippage can be managed multiple different ways, as we've illustrated here, through the if incomplete section in the setup trading parameters. Once I hit apply and OK from this point, just as a kind of a side note in terms of the technology, all of those ingredients essentially get baked in to that strategy. All those ingredients sit server side now. We're server side, co-located spread engine, and now all those ingredients or that logic or that algorithmic nature in which we're going to pay up or any of the other settings in there now all reside with the strategy and all the locations for each of the legs. So that's kind of an overview of the pay-ups. Again, it's imperative if using Spreader within CQG and CQG AutoTrader specifically that we utilize some pay-ups in the strategy. So Jim, I'm going to give it back to you.
Okay.
And from here, Jim will go through the details of the CQG AutoTrader being utilized within the CQG Spreader environment.
You didn't send it back to me yet. You have to go up to share. Okay. Okay, can you hear me now? I seem to have lost my connection.
No, I hear you.
Okay. I can hear you
fine.
just fine, Jim.
Okay. So back to the formula. Okay, you'll have to build your spread. Here I said, you know, it's easiest to do it in currency, and I'll show you on the chart how that is. I also have to build my trade systems. So once I build my spread, then I build my trade system. Now, many of you are going to need help building a trade system. CQG has a toolbox that's very easy to use. It contains all of our studies here. They're in this list. So if you needed to use Bollinger Bands or something, you could go to Bollinger Band and you could find it right in here. I got a lot more studies than you'll have because these are custom studies included in here as well. But you hit the plus sign, there's the middle band, high band, low band. Okay, so that's just an example. Then you build your strategy like I have here. You tell it what price you want to execute. Well, is it going to be a stop order? Is it going to be a limit order? All of these choices are going to be available for you in our auto trading formula builder window. You build a series of exits as well. I have a couple of exits built. This is an outright strategy that I'm using. The strategy that we'll be using for the spread is going to be a VWAP strategy. Basically, if it's above the volume weighted average price, I'm going to work the offer. I'm going to work the bid, and then I'm going to have a profit target and a stop loss. And if it's below the volume weighted average price, I'm going to work to sell it, and I'm going to put a profit target and a stop loss in. Okay, so let's go to our spread page. Here is our auto trade view. So to set up the auto trade view, you simply give it a name. In this case, I called it the name of my spread. You don't have to call it the name of your spread, but that is what my formula for QFormula is, so I thought it would be easiest to recognize it that way. I drop in my account. If I have more than one account, be sure I drop in the correct account. Then I drop in my trading system. In this case, it's called V-Index. And you can find it from the list. Everything's a drop-down, so you find it and you put it in there. If you have parameters like I have in this system, you can right-click and edit the parameters. Okay, that brings up your edit box. And I said, you know, this is when I have bid, ask, plus or minus, I'm going to work inside the bid and offer, and 2.5 is actually for the indexes is $2.5. So I'm going to work $2.50 inside the bid and inside the ask. I'm working on a $15 profit target and a $37.50 stop. And my maximum position, because I'm allowing it to add, is 3 contracts. And my size right now is 1 unit, 1 spread for each execution point. Okay, so let's go ahead and look at the chart. So the way I built this is kind of interesting. I wanted to build it a little more complex so that you guys could understand what's happening here. I wanted to build it based off of the legs, so not just the spread. So in this, I took and I replaced the @ signs, because where you see open position and @ that is CQG's wildcard. So it's whatever's on the chart. So I replaced the current bid, and I said the current bid of the E-mini S&Ps has to be greater than the VWAP of the E-mini S&Ps, and the current bid of the Dow Mini has to be greater than the current VWAP of the Dow Mini. And the open position has to be less than my maximum position, which I set to 3, which is actually 4 because I put less than or equal to. So I can put as many as 4 on. And then for my exits, I just have in there a series of exits that say, if I make a certain profit, get me out. These are canned exits. If you hit new, we've canned a bunch of exits for you. And then I have a stop. Okay, so if you have a system that you're trying to create, you can call CQG. If it's not too complex, we can usually knock it out in short order. If you want to come in and go through how to really use the toolbox and build your own systems, I'm happy to do that as well. Okay, so once you have it built, you choose from that list, put it inside your trading system. You choose your issue. In this case, it's my QFormula name, which is EPYM. And I could just type my Q number in there. So if I go to EPYM under my QFormulas, or nat gas in this case, it's Q33. EPYM is actually Q25 in my list. Okay, I just type Q25 as my symbol, and it actually will change it from Q25 to EPYM and tell me my name. Then I double-click Preferences, and I tell it what I want to chart. I have it set to 1 minute. Okay, you can change any trade through any of these other types of bar types as well. Okay, so you can, you have 1 minute, and you can, of course, it has a drop down that says 1, 5, 10, but if I wanted to trade 3 minute, I could simply type the number 3 in there. That's just a quick list I can choose from. I'm going to trade it in a 1 minute environment. So then we have this thing called Remember History. If you're going to be trading and holding your positions overnight, you're going to want to have the Remember History on. Okay, the Remember History is if you were to shut the system off, it will remember what its last position was, and when you turn it back on, it'll place your targets and stops accordingly. So it will know what that position was. If you're going to close it off every night, I recommend that you turn Remember History to off and set it to no. That way, every time I turn the system on or off with this check mark, it's going to clear all the history. Here at the very end, I have something called Reject Stop to Market. What can happen in an auto trading system is if I place a stop, it can actually wind up placing the stop into the market, which every exchange will reject, saying you can't place a stop if it's already true, if it's already in the market. So rather than just being hung and rejected, I'm going to send the order to the market to get rid of the trade no matter what. Okay, and then to turn it on, I just flip the switch, and if you watch down here, you'll see that orders are going to start to be placed in this market. Actually, right now, the market just closed, but we can go to my outright page. Okay, and in my outright page, I have some trade systems that are on. I'm working gold and heating oil, Eurodollars, and Russell. So some of these markets are still open. I have a couple of columns inside my quote spreadsheet that tell me what orders are working. So I have buy and sell orders working inside of my gold and in my heating oil. So I can go ahead and go to gold, let's say. And if I look over on this page over here, what I've done is I put our order display study. Okay, I simply right-clicked, I added a study, and I added order display, which is one of our basic studies. When you set it up, you choose your account, again, and then if you only have one account, you don't really have to choose your account. It will automatically accept that account. Okay, so that's set up so I can see where the executions took place. These diamonds here, triangles, I mean, that you see here, these are going to tell me whether I bought or sold them. I can actually hover over it and see what price I did it at. These are actual fills. Okay. If I look over here on my quote spreadsheet, it tells me how much I'm up or down and what markets I have positions in. I currently have a position in heating oil. So if I look at heating oil, I can see that it is working I'm long, so it's working a stop right here. And above the market, where you see this little square, if I click on that square, it's working a target to exit that trade. The strategy is fairly simple. As long as I am above the VWAP, which is this green line right here, I'm going to work only to buy when the market drops to the Bollinger Band. I allow it to add into the system as well, so it can have multiple additions into this trade. So if it winds up dropping again back down here, I'll actually add another contract onto this heating oil. Again, my spread itself is actually set up so that, well, I don't have this as a spread. This is outright. But when I do the spreads, if I go back to the spread page, okay, here's the spread itself, and it is actually set up in currency. So the spread is 2 nat gas to 1 crude. And this is $2,700 is how much that is worth. So when I'm looking at my stop and target, I can easily see how much money I'm risking on the trade. So if I enter the trade here and I risk it up to here, it's going to be $90. And my down here, my $90 profit, and my risk is $150 down here, $160. This is the currency tool for those of you that aren't familiar with it. And what's nice is, again, since I'm displaying my spread in currency, it's very easy to see how much money is from here to here, $330, 330 bucks. Okay, you don't have to display your spreads in currency. I know many of you don't like to do that, or that you're trading it in net change. That's fine, as long as you understand what each tick represents, or point, because CQG only recognizes points. It's not going to recognize the dollar value of that spread. I've also set up my orders and positions down here. Let me go back to the sheet for a minute. So I've got order display here. What I've also put here is the actual trading system. This is called ATS. That can be found under Studies, and it's the under Trade Systems. And you'll see there's an ATS systems on here, Auto Trade Systems, right here. This way I can actually set the particular strategy up for when I started it. So here's my nat gas strategy, and you get a list of everything that you have running. And under the time range, I told it to start at 3 o'clock. And so that's where you see these entry points at. The arrow, actually, this arrow, this is the actual execution. This arrow represents what the trade system sees. And down here, I just have the position of that trade system. I have 2 spreads on. And down here, I have what is my open trade equity on these spreads, which is $30 currently. All these are to help me keep track of what is happening inside of the spread. And I can see that reflected over here. So now I have 3 spreads on, which is now reflected in my position over here, 3. Shows on my DOM trader, and it shows my correct ratio. I'm supposed to be 2 to 1, so 6 nat gas to 3 crude oil. Okay, and everything is down here as well. I can also go into my strategy manager and see what's working, and it tells me that I'm working a buy and I'm working to sell 2-3 lots. Okay, now I have 4. That's the maximum I can put on in this nat gas crude spread. Unfortunately, my E-mini S&P is closed currently, so that will not be trading. But at least we can see how it works in the nat gas crude oil spread. If there's some questions, I'd like to take them now. What I'm trying to show you is that if you, on your spread page, you should have your spread DOM open. You could have your legs open. You don't have to. I've connected this so that it is, linked to my DOMs. I have my legs in here so I can see what the 2 legs are doing. Make sure that the system is obeying the rules. In other words, I can only get long if it's above this green line and this green line. That is happening. I'm getting long. This is the trade system, but since I'm working off current bids and offers, it is actually going to sometimes change the value of what I see here. But if I see blue arrows, I at least know that I'm supposed to be long and not short. Okay, let me pull up my chat and my questions. Okay, so if you have some questions, now's a good time to ask them. Are there any questions? I know I went through this quickly, so if you have questions, you should ask it now. What's nice is this is our one chance to now trade spreads using the AutoTrader, so it's kind of nice. There's many different strategies that are available. A lot of you will have different ideas, and I can help you facilitate those ideas. I can help you build your trade system, and if there's something you don't know if we can do, well, I'm the guy to ask. So I'm going to give you my phone number now. My direct line is 312-939-1574.
Hi, Jim. This is Tom. We've got a question that came via another path here on Could you one more time show up how you set up a spread in currency?
Okay, so in the formula builder, under QFormulas, if you highlight your formula and you go down to the the setup, the choice is here. You can either auto choose a leg, work off leg 1, leg 2, or currency mode. So that's how I chose currency.
Okay, another question is, how does a stop in the AutoTrader get activated when trading spreads?
It actually has to trade there. So the legs have to trade there. It's not going to be triggered. Sometimes you'll see that the price will actually go through your stop. It has nothing to do with that because we can see there's a lot of, bid and offer width here. And the price can actually go through your stop and not fill your stop because it hasn't traded at that stop. So at least one of the legs must trade at that stop.
Okay. Will the automated strategies keep running if CQG is shut down?
No, they won't. So you'll have to, you'll have to probably set something up so that you can be alerted if your CQG was to shut down. I don't know how you would do that, but you definitely don't want to, if CQG shuts down, you're not going to be trading.
Hey, Jim, if I could just clarify in terms of the spreader, though. CQG Spreader is a co-located solution. So if for any reason you gracefully shut down your CQG integrated client, or if you lost power, or if for whatever reason your PC were to stop functioning, your strategy continues to work and modify the leg orders even though your CQG or your essentially front end or your PC may be shut down. So we continue to modify those leg orders and work the strategy based on your price and the strategy, even if you do lose power. But that's just specifically spreader functionality. And in terms of how spreader works, even if you lose power or lose connectivity, we continue to modify those orders.
Right, but we would not modify the orders. We wouldn't adjust the orders based on if you had some kind of trailing stop or something like that. So whatever was working in the market would now be alone by itself and not adjusting any longer. The spread itself would adjust, but the profit target or whatever would not adjust. Additionally, it would not be connected as an OCO. So if you're working a stop and a target, both of them would stay in the market, and you would probably get filled on both at some point in time. Not necessarily, but if the market moved up and down in some fashion, you'd wind up with an additional spread on. So it could be a problem. I mean, you definitely want to stay in front of your machine. I mean, all auto traders can fail on this level, so this is not unique to CQG. It can happen in any auto trader.
Can you trade options with the auto trader?
Some options, if you if you want to just trade outright options, sure. But if you wanted to trade spread options, like with the UDS, I haven't tried it, and I would think not, but I can't guarantee that maybe we could. I don't know. Once you set up the user-defined strategy, maybe it would accept it. It's a question I can't answer without trying it. But outright spreads, yes. And if you're going to use our CQG Spreader to actually trade spreads, because Kevin, I think you can trade what? There's several markets you can trade options in the spreader, right?
That is correct. Mainly we're working with folks trading CBOT options in grains or CBOT treasuries or something like that. But if you're interested in spreading options, or if you have other questions on CQG Spreader or CQG Integrated Client, I'd be happy to help as well. I might as well give my contact information live. Best way to find me is by email, Kevin, K-E-V-I-N-F @CQG. Just shoot me an email, and no matter what time of day or where you're at in the globe, I will reach out to you, answer your questions. Thanks.
And my email, by the way, is anthony@cqg.com. I know I'm Jim, but it's a Greek thing. We all have the same name. So anthony@cqg.com.
Okay, and is there a charge for the auto trader?
If you have backtesting, or it comes with that product. So if you're going to trade the spreader, though, the spreader, you know, you have to have the spreader for starters, and then there's a charge for the back testing again, additionally on top of that of $250. So I'm really not a salesperson, so it's best to talk to your salesperson. These things can change, so I don't really have the information in terms of pricing or what's included in your package.
Okay. Yeah, it's always important to talk to your CQG representatives to get the right numbers on these things. Can you backtest these formulas with CQG IC then?
You can, yep. Yeah, you can run a backtest on them. Again, the way I have this set up is I wanted to join the bid or join the offer. So in my formula, I've actually put in there, let's see, as my price, the current best bid. So when you're using current best bid, that would not be back testable. I'd have to use the close of the bar, the close of the 1 minute bar, and then I could get a rough idea of how it works. But remember, spreads, in many cases, you're not going to get filled when it goes and trades in that area. You know, just because it's trading where you have your price. You've all seen that with Bollinger Bands. You're working the spread at the Bollinger Band low or the high, and you don't get filled because that's the nature of the spread. You know, you got to get both legs at the right price, or it's not going to execute the trade. So when I'm working the bid here, I can't back test with that. But if I were to look at, and I could do this with any spread. Let's go back to the outright page. Okay, so in an outright, the way the back testing works, I simply right-click down here, and I go into Optimize. And from the optimizer, I go into specify. And if I had parameters, they'd be right here, and I could go ahead and test my, you know, my thing. I can pull in somebody else's like this and just say, okay, I want to test whether I should be trading this at, let me see, close. I'm going to have to open it from a spreadsheet. This is what it kind of looks like, specify, clear. And then you turn on your what you want to test, and then let's say I wanted to test. This is an MACD system. Let's say I wanted to test the MACD from 12 to 50. I can go ahead and do that and hit close, and then hit start, and it's going to run through all the iterations with the blue line being current calculation, and then it's going to tell me what the best result is over here in my total profit column. So it also tells you how long you have. This is going to take 3 hours to run this test. There's 29,000 combinations. That's pretty much it. You can get more details on that if you want to individually, but I just wanted to brush over this roughly. I could see in my charts I have 2 gold on right now. So if I want to go to the gold chart, I can take a look at that. Okay, so I have long 2 gold. Looks like I'm exiting. Looks like I sold 2 gold up here. Yeah, and now I'm flat. Okay, so I made a little bit of money on that trade.
So one question is, what are the most successfully traded spreads for this?
Well, I'd love to take that one if I could, Jim.
Okay, go ahead.
So I work with folks that are trading every major market around the globe. Our spreader connectivity is pretty robust. So if there's a marketplace out there, most likely we're connecting to it unless it's a very small, low demand marketplace. But we have folks all over the globe trading strategies that are everything from very simple to very complex. So to answer that question, really, it depends on what style of trading you're interested in. And I'm always happy to speak to folks in regards to assisting them with making educated decisions. But in terms of giving up, let's say, what the most successful traded spreads, I mean, it really just depends on the trader himself. There are opportunities in marketplaces all around the globe. Some are more competitive, some are less competitive, but that's where some of the creativity really comes in, and leverage of the CQG infrastructure and the low latency solution within CQG Spreader. So again, I'd be happy to talk to anybody, but we don't really have a list or anything like that, or we would never give up any proprietary type information in regards to the most successfully traded spreads. Really, it really depends on the strategy, the trader, and what tools he or she is utilizing.
And then just to be clear, the CQG Spreader is an add-on to CQG IC with CQG Trader already embedded?
CQG Spreader is an add-on to the CQG integrated client. That is correct. CQG Trader being a separate and very different product, Spreader is not compatible with any other CQG product. CQG integrated client is the only way to get access to CQG Spreader and the information that we're seeing here today as well.
Okay, well, I guess a final call for questions, or is there anything you want to say to wrap up, Jim or Kevin? Because we've hit all the questions so far.
No, I mean, you can call, just call your salesperson. If you don't know who your salesperson is, you can just call 1-800-525-1085 and ask for sales. And they'll hook you up with a demo. I think that's the best way to go about it. You'll probably need to set up a demo execution account as well so that you can go ahead and try these spreads out in a demo environment. And that's the way I would get started. I can help you with the strategies. You have my number already, 939-1574.
And I, of course, would be happy to help you with the CQG Spreader. Any questions on its functionality or features?
Okay, everybody. Thanks for attending.
Well, thank you. Okay, thank you, Jim and Kevin and everyone. As I mentioned at the start of the webinar, this thing is recorded, and everyone who is registered will receive a link via email to the recording. Again, thank you, everyone, for attending, and thank you, Jim. Thank you, Kevin.
Thank you, guys. Thanks, everybody, for joining.